You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan Rose and welcome to, what are we calling this? Masters in Trading Live. I gotta turn the sound off of my other computer. I get on here every day the market's open, 11 a.m. Eastern time, go over the market, share some thoughts, and once in a while we'll have our trade of the day. So what we're gonna do, guys, is every morning I'm gonna get on here 10 minutes early and we're gonna open up the chat. I love coming in here, seeing all the good mornings on the chat. So I'm looking at the chat. Matt, John, Dale, all you guys, Riz, Brian, thanks so much for getting here early. I'll be on here early for chat, for questions, or just to vibe out 10 minutes before we got on live. So if you guys want to hop on, join me, get on here, say good morning. I love it. Make sure you subscribe to the channel, and that way you get alerts every morning when we do these videos. Okay? I'll always keep the questions up. If you have any questions, just throw them on there. Okay. Last week, we had a tough week. You know, I'm not going to come on here every single day and just say that every day is just, what does my wife say? Unicorns and roses? It's not like that. There are some days, there are some weeks that it's tough. And last week, we were talking about a divergence between the small caps and the NASDAQ. And all week, that divergence is just getting wider and wider and wider, walking into a very big unemployment number. Often what happens is the market has these divergences, and then we see a big economic number, and they come right back in play. It didn't happen that way on Friday, so that was a tough trade for us. Let me go to the charts. I'm going to show you exactly what's happening in the market and why last week was tough, and how this morning they're trying to bring things back in line with that QQQ selling off relative to those small caps. So let's check out the charts. So this is what we were looking at last week, guys. And what do we have here? This is just the NASDAQ, and this is the IWM, or the Qs. Okay, they were going opposite way last week, and that presented a trade for us. Well, that trade didn't end up working on Friday. It looks like this morning it's working. QQQs are selling off. Now, there's a little news out of China looking into NVIDIA. That's not really big news, guys. It's just not. NVIDIA is down 2%. It's just there is a disconnect. Right now, Qs have quite a bit to come off relative to IWM. If you're looking to sell something, the Qs are the most expensive. If you're looking to buy something, don't buy the Qs. You want to buy the Russell. It's going to be a much better risk versus reward. All right, let's get in the slide deck. As I was telling you Friday, guys, we had a tough day. Without a doubt, we had a tough day. But this morning, some of our names are starting to work out. So that's really, really good for us. And I'm going to walk you through the names that are working out for us to start the week. So here we go. These are all Discord comments from earlier today, just trying to get a feel of what's going on in the Discord. Marty here was able to buy, it looks like he's in these IWM, the 239 calls from Friday. He was able to get out of the IWM this morning. Scrappy here, GDX, FCX, and BZ. FCX, copper trade. It's right here in front of you. When did we get in this trade? We must have gotten in somewhere down here. Copper's not really moving. It's just up a little bit from where it was. I'm still very, very bullish copper. We're going to stay long FCX. So nice that it's working, but I definitely want to stay long this trade. But again, we always like to say 10 traders take the exact same position. You're going to have 10 different results. FCX, I'm bullish. I'm going to hold on to the trade. But some of the guys in here are taking profits. Nobody ever went broke taking profits. But if you have 10 people, you take the exact same trade, you will always have 10 different results. Another name is BZ. We're taking off BZ today. BZ is an ADR. Here's what BZ looked like. I got to tell you, trading Options. I love trading options on American depository receipts. American depository receipts. This means this company is listed overseas, and this is the American version of BZ. I'm a big believer that nobody knows where to value this thing. So when we see unusual options activity at the bottom of its expected move, it's usually a very, very good trade. And BZ, that's another trade that we're taking off today. So that's what the guys are doing. A little GDX too. Gold's moving, silver's moving. A lot of the guys have AG. So congrats. Last week was kind of tough on Friday, but people were taking off some profits this morning. This trade is fire. Quantum. Have you guys been paying attention of what's going on in these quantum names? Quantum computing is going to be like AI in 2025. The quantum names are just heating up. We talked about the quantum names maybe 6 months ago, but now they are really, really starting to catch some momentum. Look at this trade. We shared this December 5th. Today is December 9th. So we shared this December 5th. We were buying the 350s for 85 cents. And then additionally, the 7/2s. We were selling the 7/2s for 50 cents. Good till canceled. So this was the trade. For those who are able to put this trade on, it's a $4 spread, and it would cost $35. $35 to potentially make $365 if we were correct. Well, let me show you what happened on this trade, because we had to do some management on this trade, because today Rigetti jumped up, traded higher like it does. And Rigetti, if we look at our January 3.5s right here, we were getting in those for 85 cents last week, and those traded up to $1.90 today. Also, the spread, right? The 7s, the 7.5s, we were trying to sell for 50 cents or better. Those traded as high as 70 cents. So people were able to get this spread on. What I ended up doing with our portfolio is, in our portfolio, what I ended up doing is this morning canceled this trade. Let's just hold this trade, and then we're able to just sell this trade this morning for $1.55, I think. So we just bought for 85 cents last week and sold for $1.55 this week. Some people continued with the order, and then if you continue with this order, you'll have $35 of risk. If Rigetti settles above 7.5, you'll make 10 times your money. Awesome. Good question about how to access the Discord community. If you could, Chris Warder, if you can hit Chapman up with some information for our Discord community, that would really be helpful. Chapman, so Chris Warder will be hitting you in a little bit. Oh, duh. Here's the Rigetti trade. January 45. No, this is the FCX trade. Sorry. That's not what I want. I want the Rigetti trade. We'll go with the BZ trade first. The BZ, the 15 calls for $1.02. $1.35 as I'm writing this. I think it got up a little bit higher. BZ. BZ, those 15s. Now they're actually a little bit lower. So here's a trade. We're able to look and lighten up today. Boom, right here on BZ. And then this other trade in FCX. This is the one that we're in, and we're going to hold on to this trade. I am very, very bullish. FCX, I continue to be bullish on FCX. $44, January 45s, right here. So we're up a little bit on this trade. I still really like it. How about this? Let's do some analysis on copper while I have you on here. So FCX, guys, when I look at FCX, it's like looking at, I don't know, GDX for gold. GDX is a gold miner, right? FCX is Freeport-McMoRan. It's just a large company that's going to be correlated to the price of copper. So what I'm going to do right now, that is such a cool looking chart. Let me show you why that's a cool looking chart while I'm here. Two lines. Yeah, we can get you a number to help over the phone, guys, in just a second. Chris. Okay. You can also just email guys support@mastersintrading.com, and you can get somebody to call you back as well. Oh, there you go. Chris just pointed in the chat. The blue line is gold minus silver. The pink line is gold minus platinum. Gold minus silver is blue. Gold minus platinum is pink. What's the difference between these two spreads? So these spreads are blue is gold minus silver, and the pink is gold minus platinum. What this is here, guys, it's a triangle trade. It's a triangle trade because there are three instruments in this chart. Let's do it this way so I can write over it, and I think it'll be a more complete lesson if we do that. Let's do it this way. So I think a triangle is a really cool and just, it's an effective way to look at the market. Okay, let me get my slideshow back on here. Okie dokie. Now we have gold, silver is blue. Okay, the pink is going to be gold, platinum. Okay, so let's say for here, let's say that this pink line is too bumpy and there's a disconnect. And you've been watching these and you say, you know what? This JR fella told me to watch these two lines, and when these two lines break apart, we might find a trade. So how do we express that trade? Well, the pink line is going to be gold, platinum. Right? So we want to sell gold and buy platinum. That'll get you short that pink line. The blue line, you would buy gold, right? And you would sell silver. Gold's going to cancel each other out because you can't be short gold and long gold, right? So the only difference in that chart, and the way to look at that chart, it's a triangle. And the triangle is going to be platinum versus silver. So watch. We look at silver against platinum. So that green line is just when the blue and the pink separate. That's all it is. And so I can hide those other two. And you could trade that triangle by just looking at that one line. When does it get most disconnected? There. That makes sense, guys? So what do? We go of watching three different, we go from watching a triangle between the key players of silver, gold, and platinum, but really, gold, silver, platinum. And that's what we're doing. We're just looking at the triangle between those three, knowing that over time, they are going to push and pull off one another. It's a really, really cool example. Yeah, Brian, makes sense? Yeah, and we want to do this with everything. Everything that we do, we want to do some kind of, you want to tie it down. And that could be QQQ, SPY, IWM or Russell, right? Nothing moves in isolation. Bonds, 5-year, 10-year, 30-year, you could trade them against one another. I mean, corn against soybeans. You could trade those against one another. Hey, is this a long-term trade or a day trade? Both. We always want to say there's a strong side and a weak side. Right now, let's look at volatility. Right now, volatility measures are all up a little bit, right? I mean, it's not crazy. But if we look at the disconnect, guys, between the QQQ and the IWM, if you wanted to make a bet for the short side, I'd encourage you only to use QQQ. If you want to make a bet for the long side, I'd encourage you only to use Russell or IWM. But it doesn't really matter so much for time frame, as long as the time frame that you're using in your analysis matches the time frame of your trade. Obviously, you don't want to do a 3-year analysis for a 3-day trade. So it's really important to make sure that the analysis that you use and the time frames that you use in your studies match the expectation of your trade. Cool example. We talk about this stuff all the time. We have a divergence program. The divergence program we have is a little bit just more sophisticated, but every single time throughout my career, I've always traded one thing against another. We need a way to tie things down. We got a live class today. Everybody who's part of our short-term options program, get excited. We have our kickoff call today at 2 o'clock Eastern time. So that's what I've been preparing for all weekend. For everybody in All Access, you guys don't go anywhere. For everybody else, we'll see you live tomorrow, 11 a.m. Eastern time. Thanks for watching, guys.